Okay, traders, so we're going to be taking a look at the AUDUSD initially. We'll be jumping into the chart of the DXY in just a second, but I wanted to go to the AUDUSD monthly time frame just to start with. So firstly, the Aussie against the US dollar is one of the only major currency pairs that hasn't taken out the COVID low. So when the market crashed during COVID, the AUDUSD actually has held up relatively well. So what we can now see is on the monthly time frame, we've got this kind of doji candlestick formation, which generally, the longer the time frame, the stronger the signal. So generally, a doji candlestick formation can indicate a reversal in the market or indecision. So we've had a very thin body of the candle, long wicks either side. Just going back through time, I want to kind of highlight a couple of other doji candlestick formations that have occurred previously. So at this low before a bounce higher, we had one in I guess it was August 2021 before a move to the upside. I understand that may not look like a significant move, but in the FX market, that moved from 0.72 to 0.75. That's a 300 point move just there alone, following that doji candlestick formation. So that is a relatively large and tradable move in the market. Let's take a look back in history as well. So we had another doji candlestick formation at the low here. So we had a move up, a move down, higher low, doji candlestick formation. So that's obviously resulted in a reversal previously. We had I guess that could be classed as a doji candlestick formation through here as well. Or it could be classed as an inverted hammer. Similar kind of scenario though, we've had long wicks either side, very relatively small body of the candle as well. Okay, so firstly, on the monthly time frame, we are looking at a possible reversal going into Christmas on the AUDUSD. Now, the stochastics RSI is also showing, we're possibly getting this crossover and momentum maybe shifting towards the bulls. Similar scenario occurred during COVID, but we haven't had that kind of bullish divergence just yet on the stochastic. So through here, we had a bullish divergence. Through here, you had a bullish divergence. Through here, you had a bullish divergence as well. That actually hasn't occurred just yet on the AUDUSD monthly time frame. So just something to keep an eye on. The stochastics is relatively low, but we are getting a bit of a crossover to the upside now as well. So monthly momentum maybe shifting from the bears in towards the bulls. Now, if you remember the webinar I posted last week about the DXY, seasonally, the US dollar generally weakens going into Christmas as I guess sentiment in the market moves in favor of the bulls. Market sentiment generally moves positive going into Christmas. People are spending money, pushes up equity prices. It will strengthen the Aussie dollar because of the risk on market sentiment. So something to keep an eye on seasonally. Now we are in, I guess the conditions we're in right now are very different to what we've seen into previous years. So we're possibly in a bear market. So seasonally, I guess that kind of data, it's not your typical year. So something to be aware of, but not your kind of it's not your be all and end all, I guess, with the seasonal data at the moment, but something to keep an eye on. Now, if we go down to the weekly time frame, we can see this kind of bullish candlestick formation coming through here on the weekly time frame. Momentum on the stochastics is pushing higher as well, which is a positive sign. We've had a series of bullish candles through here. And if we just go down to the daily time frame, 4 hourly, what we possibly have coming through here is a inverse head and shoulder structure on the AUDUSD. So we've got a kind of a neckline coming through here, a left shoulder, a head in the middle, and possibly a right shoulder line now coming through here. So when you get a inverse head and shoulder structure at the bottom of a major trend, that can indicate a reversal in the market. So again, just touching on the GBPUSD, we had a 5-wave structure through here. This isn't a clean 5-wave structure on the AUDUSD. It does appear to be a corrective rally. So it could be an A, B, C wave up, A, B, C down, and we're going up in 5 waves now. Okay, so that would be an A, B, C corrective rally before rolling over further. I really can't get this into a 5-wave bullish rally. Okay, so keep that in mind. We may be heading lower in the weeks to come after a completed inverse head and shoulder structure. So we're looking for long trades, but preferably on the pound. The structure looks a lot more bullish, but there is also still an opportunity here on the AUDUSD if this top does get taken out. Okay, we've got an inverse head and shoulder structure. The longer term time frames are shifting towards favouring the bulls at these lows. So just be aware of another rally, possibly into 0.67. Now we do have a number of negative trend line resistances coming through as well. So we've got a negative trend line coming into play here. A break above that will favour a move higher. We can then draw another negative trend line coming into play around here as well. So just be aware of these kind of negative trend lines. They can act as areas where people are taking profit from buy trades and also stepping into the market to sell at these levels as well. So watch out for this inverse head and shoulder structure, but on the long side, I do prefer the pound US dollar rather than the AUD USD. Okay, cool. So that's the AUD USD. Let's touch on the US dollar index. So last week, I highlighted this possible Elliott wave count. Simply put, it's an A wave, an A, B, C wave for a running flat for a wave B, and then coming down for a wave C in 5 waves. So this will need to be a 1, 2, 3, 4, 5 down. Okay, I understand it looks a bit messy. There's a lot going on in the charts, but if we just keep it nice and simple. Last week I was expecting one more push to the upside into this 1-to-1 parity. That it rolled over slightly early. It just means we have to recount and reconfigure this count through here. So it's a bit choppy in here, and obviously we had these. One second. We had this wick down through here during the Fed interest rate decision and press conference. So sometimes when you're trading, these big wicks can kind of mess up the Elliott wave count. But we can get 5 waves through here. Okay, we may have to do a bit of work to get a 5 wave structure fully through here. Otherwise, it may just be an A, B, C wave counter trend rally, which isn't the best count there. But we're just keeping an eye on this. We've got a 5 wave decline through here. Pretty happy with that. Okay, so if we go down to the 15-minute time frame, it looks like wave 1 to the downside is completed. We've got a 1, 2, 3, 4, 5. Okay, so after an A, B, C, we can possibly look for shorts on the dollar index coming back down to go lower. Okay, so that's a 5 wave decline, which is a good sign. So that 5 wave decline is, I guess, the same count through here. Okay, so the 5 wave decline through here, A, B, C up for a wave 2. So that same scenario now is hopefully occurring over here. So you've had a wave 1 down. We're waiting for an ABC correction to go short on the dollar index, and that'll also be when we'll be looking to buy the pound USD as well. That should also benefit metals, so gold, silver, and other commodities, and also risk on assets. So again, Monday open, we don't generally trade the Monday open. It's just a planning week for the days ahead, just to kind of set some parameters, set some trading strategies, plan out the week ahead and how I'm looking to attack the market. So just to clarify, the way I'm looking to trade this right now, I'm not looking to get into the market. I'm not saying buy the pound USD right now. What I'm saying is wait for a corrective rally on the DXY through here, and then we can start looking for the next short on the DXY coming down. Okay, so patience at the moment, but we have had a good feel for the market over the past couple of weeks. We're getting a bit of momentum going with our trades, which is a positive sign. We just need to give the market a day or two to settle down, let the gaps fill on a Monday, and then we can start looking to layer positions in the market over the next couple of days. Okay, on to the GBPUSD. So if you watched last week's webinar that I posted on Friday, you would have seen the chart of the GBPUSD where we were trading around the 1.1184 support level. I was highlighting that this is possibly a corrective decline coming through here, and we should be heading higher into that 1.21 resistance level for a wave 3 or a wave C. So if the GBPUSD has bottomed around this low when the pound did actually crash at 1.0365, we could be heading higher now. We could be starting a new bull market for the pound US dollar. It will obviously depend largely on the DXY and where the DXY actually moves in the coming weeks. We've got the US midterm elections coming up on Wednesday, so that will create a lot of volatility. If we do get the Republicans taking the House or the Senate, that could impact the financial markets in a positive way. So I have done a write-up on the Imperial Wealth platform. I'll put the link in the description below on possible scenarios and how it's going to impact the financial markets. But getting back to the pound USD, let's take a look at this price action and the structures just so we can understand where we think the price is going to be heading. So we can see a clear 5-wave rally to the upside for a wave 1 or a wave A. Okay, so it's either a wave 1 of a 5-wave rally to the upside or a wave A of a 3-wave corrective rally to the upside. So we can see a 1, 2, 3, 4th wave triangle, 5 through here, 5 waves down through here. So that was quite a difficult structure to, I guess, understand at the time when we was looking back at it. But what's kind of clear to me is this rally through here is 3 waves. So we've got an A, B, C, clear as day really. So that's got to be a B wave counter trend rally of a running flat. So we've got a 5, 3, 5 coming down through here. And the pound may now have bottomed around this level. It fell just shy of the 1-to-1 parity, okay, of this initial decline through here. So the 1-to-1 parity would have been at 1.1059, fell just shy of that. That's where I was looking to possibly go long, but we're seeing a bullish move to the upside now. So ideally we're going to wait for a bit of a pullback through here, or we're going to look to buy the top at 1.1388 for a move into 1.2, 1.21 over the coming days. So I quite like the look of this. Overall, just to sum up, we've had a 5-wave rally up, an A, B, C down, so a corrective structure through here. We're now looking for a 1, 2, 3, 4, 5 waves up to complete a wave 3 or a wave C. So we don't want to get too carried away and suggest that the pound has bottomed. All we know is that we've had a 5-wave rally, 3-wave correction, so we should now get another 5-wave rally to the upside. Okay traders, so let's take a look at the silver market. So we've done a number of updates on the metals market previously. We do feel that there's going to be a turning point in the metals market going forward once the dollar index does really start to make some downside coming off its substantial highs. So once we do see that dollar weakness play, we're going to start to see that filter through into commodities especially. So commodities do remain under pressure when the US dollar is pushing higher. The vice versa is also going to be true. So when the US dollar index is going to start making some downside in the market, we can expect metals to begin to perform well. We also have to consider the impacts of the China reopening. Okay, so there's news coming out now from China that they're going to start looking to transition away from the zero COVID policy, which will be bullish for commodities, especially things like copper and silver, which are heavily used in a number of goods essentially for building, housing materials, electronic goods. We know there's a massive play in renewables, and silver has a big position in that play over the next couple of decades. So let's take a look at the charts. We're going to start on the monthly time frame, do a top-down analysis, and really take a look at what's happening in the price action. So just a couple of things to obviously note. We have the stochastics RSI, looking like it's going to start to move to the upside. This has generally resulted in a bullish move previously. It can stay in this kind of negative territory for a while during a bear market. So we can see over here during 2011 through to 2015 in the bear market, the stochastics RSI did come down to this level and kind of revisit it on a number of occasions previously, whilst the price action was obviously moving to the downside. So, there can be periods where we get this bullish reading and we can get some short-term movements to the upside, and then obviously price action continues to move down. So obviously that's something just to keep an eye on, but we're going to start using that as just one form of analysis. So we're trying to kind of piece together bits of the jigsaw. Now what we can still see is we have a major level of support coming through this area through here. Okay, so we've now had a breakthrough of that resistance level, come back down. It's now retested that new support level, and it's looking like it's going to start moving to the upside. So that is a retest scenario of this support level, which is a good sign. We've had a very bullish looking impulsive move to the upside, followed by a corrective choppy decline through here. So that to me would say a bullish up, and corrective to the downside, and it's gearing up, ready for the next move higher. I've done a previous webinar on what's happening with the vaults in the UK. If you haven't done that, I will attach a link in the description below. So the vaults across the UK are being drained. So big players, banks, governments, they're standing for delivery on all precious metals, so silver and gold. So the big guys are actually taking delivery in the market at the moment. Now, if we take a look at the monthly candlestick formations, we can see a possible inside bar at support down here, followed by a doji candle. And obviously we're only 7 days into November, so I wouldn't read too much into this candle in here just yet, but it's looking positive for the time being. Now, the market is obviously retesting this new support level, now resistance. Okay, so it was previously support, it's now acting as resistance. If we get a break above that level and a retest, then we should be making ways or moves to the upside, which is a good sign as well. So a couple of levels to keep an eye on. We need a break above that 2132 level, and now we'll jump down into the Elliott wave analysis and just kind of play with the bullish and bearish scenario. So I'm fairly happy with this count through here. 5 waves up, 1, 2, 3, 4, 5. If you go down to the daily and the 4-hourly charts, you'll see there's a nice pullback in here for the 4th wave. We've had a 3-wave correction down here, A, B, C, for an A wave, fairly comfortable with that. A 3-wave correction up, A, B, C, for a B wave. And we're now trying to work out this count on the way down through here. So you'll notice that I've added in a blue count now as well, and this is really just my alternative scenario. So we can have a 333 corrective decline, that can occur, but generally an ABC correction is a 335 correction. So if we've had a 3-wave correction here for wave A, a 3-wave for wave B, we've then only had a 1, 2, 3 down potentially in here. So this 4th wave in blue that I've put here is an alternative scenario where what we're looking for is a 1, 2, 3, 4 and 5, one final move down into that 15 area. So that is still on the cards. That could happen. The only way that may not occur, or the only reason that may not occur, is if we get a break above this level in here, which is at 2160. Okay, so we know that a wave 4 and a wave 1 shouldn't actually overlap unless it's a leading diagonal or an ending diagonal, which I don't think this is, because wave 3 through here is longer than wave 1 in here. Okay, so this is a leading diagonal down through here. So we've had a 1, 2, 3, 4, 5 leading diagonal, fairly confident with that. 3-wave correction A, B, C through here, and then this is impulsive to the downside. Okay, but we can also count a number of different waves in here. So you've got a 1, 2, 3, 4, 5, 6. There's 7 waves down in here, so it's quite complex. That's why I was presenting that possible one more low scenario, because that would then indicate that this is a wave 1, 2, 3 in here, 4th wave correction, and a 5 coming down through here. So that's a possibility for silver, that we have one more low to go. So just keep an eye on that. We're obviously still looking for the bullish side to unfold in the metals market. I'm invested myself personally across a number of silver stocks and ETFs, so I'd love for the silver market to break this 2160 resistance level, and then we should be moving a lot higher. But just be aware that we could have one more low down coming through here, which wouldn't mean that that's the end of silver. It just means we can start picking up silver from lower levels. Now, we've had a very bullish move last week on the Friday close, which is a good sign. So we may just need to look for corrective pullbacks, but I'm not really looking to make any major moves in the silver market until we get a break of that 2160 level or a corrective decline through here. Okay, so that's the silver market. If you've got any questions on silver, please drop a comment below. Just following up from silver, I am just going to do a bit of analysis on a silver stock I'm personally going long on. So I am invested in Silver Mines Limited. SVL is the ticker code. One of the reasons why is I'm looking at a 5-wave rally to the upside on SVL. We can see a 1, 2, 3, 4th wave triangle in here, and a 5th wave rally to the upside, which is a bullish structure from the lows through here. If silver is bottoming and it's starting to make its way to the upside, then we can also look for a move higher in silver mining stocks as well. So we've had a bullish 5-wave rally to the upside, possibly an ABC correction, so an A, B, C for wave A, B, C for wave C, for wave B, and then a 5-wave decline, 1, 2, 3, 4, 5 in here for wave C. So I'm looking at this as the first move to the upside, some kind of correction occurring through here. I am long on SVL. My entry price was around 0.18, so I started to accumulate through this zone through here. If we do get a break of this sort of pennant structure or negative trendline resistance, then we can look for a move to the upside coming through here and building higher. Okay, so it will obviously depend heavily on the next move on silver, but this is just an example of a stock that I am personally long on in the Australian stock market. Okay guys, so hopefully I've covered enough technical information there for you guys. If there's any other charts you're looking at, please feel free to share them or comment below on any charts you want me to kind of analyze in the next webinar. Cheers for now, and we'll speak soon.